Hello, everyone. Welcome back to Inside the Vault. Today, my guest is Rich Checkan, President of Asset Strategies International. Rich has been around the precious metals space for over 25 years and is a wealth of information. I wanted to have Rich on the show with us today so that he could give us some perspective about bull and bear markets for precious metals, which is especially relevant right now since we are living through a bull market. Rich, welcome to Inside the Vault. Very excited to have you with us here today. You're that professional, experienced voice of reason. I always enjoy talking to you on the phone when we get together. So happy to have you here with us and our followers today. Welcome to Inside the Vault, Rich.
Glad to be in the vault.
Rich, you've been in the industry a really long time. You've witnessed bull markets, bear markets. You've pretty much seen it all when it comes to precious metals. I wanted the first question to be fairly high level. What are your impressions of where we are right now in the precious metal space?
That's very nice of you, Mark. Nice way to say I'm really old, but thanks. We've seen positives, we've seen negatives in the precious metals market. This market, although at times things are happening a little faster than you would think they should in most bull markets, they're really playing out like the two previous bull markets before them. So in terms of, our impressions of this one, it's really no different from the others with one caveat. Two caveats. First one is I think COVID-19, the pandemic, has basically pushed things in the early stages a little faster than they ought to have gone. It's like throwing kerosene on a fire. It was going to happen anyway, we just sped it up. The other thing is all the unprecedented things that have gone on in terms of stopping the global economy as a reaction to the pandemic, the artificially low interest rates, the money printing, et cetera, globally. I think all these things are going to have impacts that you really can't 100% guarantee when they're going to show their face, but they're coming. So that leaves a little uncertainty, but the market itself is playing out like it should.
Okay. And what has been the reaction from your client base, Rich? I know we do tend to share a little bit of high level information about what our clients are doing, but I wanted to hear it from someone else. You're in the United States. A lot of your clients are Americans. What has their reaction been to what the market volatility that we've seen over the last 3 to 4 months?
Clearly, they've picked up their buying activity. There's no two ways about it. When there's more uncertainty, when the dollar shows signs of weakness, people move to a safe haven known as gold. And once they go to gold, the necessary follow-on for diversity is to pick up some silver, et cetera, along the way. So that's all playing out pretty normally. I think our customers are pretty calm, cool, and collected. They've been with us a long time in many cases, but their buying activity has clearly picked up. If you go back 2 years ago, more clients were selling than buying by a long shot. And now the clients that weren't quite ready, weren't picking up the phone or answering emails because it just wasn't time, they're all calling in on their own now, and they're doing a lot more buying than selling.
Did you see anything? We had a pretty large pullback this week. Silver was down 15% in one trading session. I don't remember a time in my 15-year career that I'd seen silver make such a large move downwards in one day. But what did you see as a reaction again from your clients? What was the feeling amongst the people you were speaking to?
Well, yesterday we had some people move in, so they already had allocated funds. They were ready to make a purchase, and then we had that move, and they said, well, I'm going to do part of it now. Not knowing where it's going tomorrow. If it goes further, I'll do a little bit more. And what happened actually is this morning, we saw the rebound, so I think what happened yesterday clearly is we saw some selling for profit taking, which is very normal in this market. We've had incredible appreciation in both gold and silver. So we saw some profit taking that led to stop losses. So the market triggered sells and then triggered further sells. And that's why you had such a big move. But that's healthy, for one, and for two, our clients jumped right back in on the bargain hunting. And I think our clients aren't the only ones if you look at the markets today.
I agree. We're seeing the same type of activity at SWP right now. In your opinion, Rich, you've been around a long time, and I always, when I think about ASI, I think about a firm that really speaks to their clients to get to know their clients a little bit like SWP does. What type of products do you recommend, or are you speaking to your clients about right now? Are there certain things that you think are good value products versus others that might be a tad too expensive, or you're seeing the premiums just kind of in a place where it makes you uncomfortable, maybe recommending those products to your clients?
Well, yeah, and I think you might be seeing it as well. The pandemic has many effects all over the economy, all over the world. So one of the effects is the mints, whether they be private or government, they're social distancing. They're working different shifts. They're cutting down production because they can't have all of their people there at the same time, just like every other business, right? So what that means is they're making less stuff, and demand is surging. Right, so that's not a good combination. What they've done is they've focused on the material that most people are prone to buy. So the 1 ounce gold, eagles, maples, buffaloes, et cetera, that type of material, and they're not touching the fractionals. And we're seeing that across the board. They're making decisions as to what most is in demand, and they're making that, and they're foregoing the rest. So you have to kind of keep your eye out. You have to have a good dealer you can talk to who has their pulse of the market, and they can guide you through what's available, because the stuff that's not available carries with it two things that aren't the best for investors. One is increased premium. The second is increased delivery times. So you want to get what's available at the proper premium, and your dealer can guide you through that. And we're seeing the same things.
Are you seeing, just a further thought on that, are you seeing, or I should say, I'll take one step back. One of the things that we're recommending to our clients, which isn't typical for us really, is that there is some value to be found in these private mint products, the 1 ounce rounds, the 10 ounce bars. They are available. The total spreads are a little bit tighter than what we're seeing with some of the products coming from the Royal Canadian Mint when they're available, or the US
Yeah.
Mint. Are you seeing a little bit of that on your end as well?
We're seeing that as well, and my thoughts on that are this: I've never had a problem trying to buy or sell off-brand mints. Okay, so not government mints, but private mints material. So it is as advertised. If you deal with a reputable firm who's buying from reputable mints, you have no issue in terms of product. And in the end, if I had a Silver Eagle up against a Buffalo Round, the Silver Eagle is probably a tad more, you can make an argument, liquid. But since I've never had a problem selling either one of them, to find liquidity, I mean, if you can sell it, you can sell it, and at reasonable prices. So yeah, I have no problem with that type of material if it's
Good.
available.
Good to hear that from you as well, a seasoned veteran agreeing with one of our recommendations. Um, what's your expectation, Rich? And I know it's hard. There's no crystal ball out there, and I'm not going to hold you to this. But again, based on previous bull markets, based on your
Yeah.
experience in the space, how long do you think this opportunity or this market might last for investors? And maybe that's two separate questions. How long do you think this bull market will last, and how long should people wait before they, if they're on the fence about coming in and investing in precious metals, how much longer do they have before we start seeing prices that are a little bit too high to start putting money into the market?
December 2nd, 2027. No, that's not true. My take is this, and I think the jury is going to have to decide as history unfolds. But I could make an argument, technically, that the bull market started a little over a year ago. May of 2019, when we had the big breakout above $1,500, or I'm sorry, $1,300 an ounce. All right, and then it went like a hot knife up through butter to nearly 18. So a lot of people are calling that the beginning of the bull market. You could make the case that from the lows, which were hit in December of 2015, that was the start of the bull market as it slowly but surely started plotting its way forward to the breakout and from the consolidation in 2019. So given that, if 2015 is the date, we got about 10 years from there, so another 6 years. If last year is the year, could be 9 years, 10 years. Okay, these bull markets tend to last about a decade, right? 71 to 80, 2001, 2011. I don't know that this one's going to be any different. My enthusiasm's a little curbed because within a year, we took out all-time highs. That's not normal, but I think COVID and the government's response to COVID had something to do with that.
Mm-hmm. One of the questions that we get a lot, Rich, about timelines, and again, because nobody has a crystal ball, so our clients tend to lean on us to make those predictions or try to give them information to help them
Yeah.
with their decisions. But at what point does, or at what price level, both for gold and silver, does someone like yourself, do you get slightly uncomfortable when someone asks you the question, is it too late? And that's a question I get a lot. Is it too late to own precious metals? And of course there's, well, you should always have some in your portfolio. That's, the standard answer. You should have an allocation of precious metals. Always, it's optimal to own it. But there gets to be a point where people are looking at shorter term returns. Especially they look at silver and they go, okay, it's at about $30 now. If I invest now and I sell at 40, there's an opportunity to make a fairly quick return. Is there a point in time where you say to your investors, look, you should actually start to think about liquidating? Or are you in the mode right now where you think, I'm happy that my investors are still piling on the metals and not thinking about liquidating yet?
No, that's a very good question. Everybody says, when do I sell? How do I not miss the top, right? It talks to why you're buying metals in the first place. The one hand is what you mentioned. I personally believe everybody should have 10% investable assets in gold all the time. It's wealth insurance. I buy that, I maintain the allocation, and I never, ever sell it unless I have a financial emergency. Because my definition of that metal is a store of purchasing power in a liquid form for a potential financial crisis I hope I never have. If I have it, I sell immediately, meet the need, and move on. Try to backfill my wealth insurance as quickly as I can afterward. If I never have an emergency, I give it to my heirs, give them a start in life. The other bucket for precious metals, and I think it makes sense in a bull market to maybe allocate, personally, my opinion, 10 to 15% more of investable assets. So at my most bullish, I'm at 25% in metals. Allocate that for profit. And the difference here is, if you're buying for profit, then it's like you're dealing with your stocks or anything else in your portfolio. You should be rebalancing on a regular basis, right? So if you allocate 10% to investment for profit and it's now 20% of your portfolio, what do? You sell half. You don't wait for the top. You sell half, and then if it continues to move up, the next time you rebalance, you sell whatever you have to do if you're over allocated. And if you do that all along, who the hell cares where the top is? You're protecting yourself and booking profits. People never go broke taking a profit. Okay, so you take that all the way up as you climb.
Okay.
So no, I don't fear that at all.
Good. Well, thanks, Rich. I appreciate your opinion there, because it is that question that it's difficult to answer. It really can vary from investor to investor. So again, to hear it from you, is comforting.
Mark, I know you've heard this from me before. Get emotion out of it. Okay, emotion loses more money than it's ever made for anybody. Get it out of it. Make a plan. Work the plan, or plan to fail.
That's a perfect transition into my next question for you, Rich. Again, banking on your experience here. And I wasn't alluding to you being an old guy when I first introduced you.
Twice now, but who's counting?
I always figured you started off at like the age of 14. You were just thrown into the industry or something like that to have all this.
No. I didn't get in this till I was almost 30. I joined my uncle and his partner, Glenn. Yeah, so I've been doing it about 26 years now.
Okay. Well, so this is my question, and I know it can be a tough one, but what lessons have you learned? And this is for the benefit of the viewers again. What lessons have you learned having lived through a few precious metal bull markets? Are there any things that investors need to be wary of during these volatile periods of time?
Well, bull markets don't go up in a straight line. Bear markets don't go down in a straight line. And that's healthy. So anytime you see like correction like we saw recently, big or small, that is the sign of a healthy market, not an unhealthy market. Okay, so dips are to be embraced, not feared. Okay, unless fundamentals clearly change. I just be calm. If you have allocations properly assigned in your portfolio, and they're there for good reasons, trust them, work the plan. I don't know what else to say, but I think gold belongs in every portfolio. I think its primary role is insurance. I think silver at times belongs in a portfolio, and I think its primary thrust is profit because it falls further in the bear markets and it rises higher typically in the bull markets. And that wider pendulum swing means greater profit potential to you. But just work the plan. And like I said, rebalance all along the way. Don't go try and pick the top and then lose everything that you worked for.
Well, and that's a very good lesson in and itself. Like we saw this week when we had a 15% correction in silver. If you're saying, look, that's completely healthy, don't panic. We saw the rebound immediately. Again, just that knowledge, that experience that investors, don't have to immediately sell because they have realized the profit over the last few months. They don't have to sell and take all that profit immediately. They can maybe take a little bit, hang on to the majority of it, and look for the next level.
Absolutely. I think you sell in a rising market and you buy in a falling market. And when I saw that dip, my reaction was finally, and I was excited. So.
Well, I think we're all excited at this point in time. I know that a lot of us have been waiting, especially the silver buyers, have been waiting an awfully long time for the markets to finally perform. And it is nice to speak to our clients right now, and everybody's in a pretty cheery mood. A lot of them own the silver mine or the precious metal mining stocks as well. So it's a good time all around, and probably well deserved for a lot of precious metal investors who have been very patient.
Hey, Mark, some of the people we know, mint directors, just 2 years ago, were telling me stories that when you look at the production floor at the mint, if you just added flowers to it, it would be indiscernible from a morgue. Okay, and now look at what's going on. I mean, it doesn't take that long for things to switch. So.
That's pretty good. So, Rich, I'm just shifting gears. I have a couple questions for you about particular topics I just wanted to touch on. Especially, we're in an election year in the United States. It's been maybe one of the most volatile periods in more recent American history. I think it's safe to say, with the Black Lives Matter movement, the political situation, COVID, puts a certain amount of stress on all of us. And
no question.
Are you seeing a reaction from your American clients looking for alternatives in whether that be more precious metals, whether that be offshore storage of their precious metals or other alternatives? What are people talking about? How are they feeling? What's the sentiment amongst American investors that you speak to?
Yeah, uncertainty with a capital U. And for all those reasons you just mentioned and more, I still look at, the pandemic, which has not been resolved despite, I think Russia announced they have a vaccine. I'm not stepping first in line to take it. But the bottom line is that is unresolved, and how we deal with it is unresolved. The government's reaction to it was incredibly extreme. Across the board, whether you think it's right or wrong, it's absolutely extreme. I don't think we've ever seen production economies completely shut down, other than maybe during a wartime, but at least in those times they transitioned to making wartime things, as opposed to, just shut down and do nothing. So that we're going to have to deal with that. There's going to be, I guess, ripples from that type of activity. The weakening dollar will have an impact, obviously, on your gold price, but many other things. And the low interest rates and the monetary expansion. Now, we haven't seen inflation yet, but it's coming. I mean, you can't put that kind of money into the economy and drop it from helicopters on corporations, individuals, and not expect it to have an impact. I don't think it's immediate. I think we have default. I think it follows by recession, and then we move, or deflation followed by recession, followed by stagflation, like we saw in the 70s. But that inflation is going to rear its ugly head. So that, coupled with the social issues going on, the dysfunctional nature of the U.S. government and right now, and there's a lot of uncertainty, no two ways about it. So people are looking for alternatives. They're looking for safety. Gold is at the top of that list, and they're spreading it around. For forever we've talked about that three-legged stool, right? You don't keep all your assets in any one currency. You don't keep your assets in any one country. You don't keep all your assets in any one asset class or investment. And they're following that, which is why I think you've probably seen an uptick in the number of clients we're sending to you offshore, because that gives them another level of protection with the diversification across all three of those areas.
Absolutely. I think it's safe to say that we have seen a spike and a peak in terms of the interest in our services. And I know a lot of other vaults worldwide are experiencing the same thing right now, probably at about 300 or 400% year over year of what we were seeing previously. And a lot of those investors are new to offshore diversification, which is another indicator that, there's another group of people that are feeling uncertain, to your point, about what's going on. Not only in the United States, obviously in Canada and in Western Europe, same feeling. I mean, I know, speaking to my contacts in Germany, there's a lot of people lining up at Degussa right now to get their hands on some gold. So this is really a global phenomenon, it seems. Rich, last question.
And this may be if I could just add, I don't think this is a short-term peak. I think in the end, you'll eventually see a much higher peak when this is all said and done. And the reason I say that is you go back to, say, 2010, near the end of the last bull market, I had 6 sales reps that were fielding 200 calls an hour. We're not there yet. Okay, we're getting busier and busier every day. They have the phones glued to their ears right now for incoming calls when all they used to make were outgoing calls 3 years ago. We're not there yet, though. It's still picking up steam.
I hear you. Last question for you, Rich, and it's something that we don't address very often with our clients. So I wanted to ask you, because I know that ASI does work with numismatic coins, collectible coins quite often, and I wanted to just get a sense, how do those coins perform in a market like this? Is it any different from the standard bullion coins, and are you seeing kind of a surge in demand for collectibles and numismatics, or is that two different games, apples and oranges? How is it being affected?
Yeah, they're slightly different. I mean, they're coupled by the fact that the gold composition or the silver composition of old coins, right? But it's a different product, but for a different individual in a different place trying to accomplish different things. So this isn't bullion. This isn't wealth insurance. It could be profit. I think it's a smaller allocation than to silver would be for a rare coin or a numismatic coin. But we are seeing demand pick up. Keep in mind, we're coming out of a period where premiums were depressed to 10 to 15-year lows in many cases for some of the common material, $20 Saints and 64, et cetera. We're seeing demand pick up. We are not seeing supply pick up. With the pandemic, we're not having face-to-face auctions. There's not as much metal coming into the secondary market. 3 years ago, there was a lot of dishoarding of old U.S. coins coming back from Europe, from the banks. That ceased, right? So the bottom line is supply has dried up. So I would expect the result of that to be rising premiums as demand continues to tick up and product is still unavailable, hard to come by in the market. The premiums will kick up because people have to pay more to get what people really want.
Right.
But yeah, they're coupled, but they're not the same market. They're used for different things.
Okay, great. For the followers, if ever you are interested in numismatic coins, ASI is a wonderful place to source those coins. They have a lot of experience and knowledge in that area, so please feel free to reach out to Rich and his team over there. Rich, one last question before I let you go. I can't let you off the hook without talking about hockey. It is the NHL playoffs. We both love hockey. Are the Caps going to win the Cup this year?
I don't see why they couldn't. In the few games that they had for the seeding, I haven't seen much of Ovi. But I think since he's a playoff animal, I think we're going to see him show up soon. Let me just put it that way. Game 1's on the horizon.
I'm sure he won't stay too quiet for too long. Well, Good luck to your Caps, Rich. Thanks a lot for being with us here inside the vault. Just again, a wealth of information, some good nuggets in there in today's interview, and I really appreciate your time.
Always a pleasure. Thanks, Mark.
Thanks, Rich.